Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. It's Monday morning. You all know what that means. You know what that means, everybody. We're going to talk about some news stories and a more conversational podcast style episode here on our channel. Everybody, let's hyped up. We got 4 great stories for you. Let's have some fun with it. Let's go.
Smash that subscribe button, guys. Give us a nice thumbs up here on your Monday morning, kick-starting the quote-unquote work week, guys. Again, 4 stories here. Got a bunch of stocks that are in the mix here. Very interesting week. A lot of turbulence has happened this week. Obviously, we're not here to talk about Joe Biden dropping from the presidential, uh, you know, campaigns. So that is not going to be on our list here because it just happened as we're recording this. Because it is Sunday here about 2:40.
Yeah.
But we got 4 screaming stories here that set stock prices all over the place. And for this first one's actually pretty funny.
Yeah, this one's very funny. So we've been talking about Starbucks for a while on this channel, right? Um, we talked about them. They were on our video on Sunday as a stock to watch. And what was funny is we recorded that video Thursday night.
Yeah.
Thursday night when Starbucks was in the 73, 74 range, whatever it was. Everything was cruising along just fine. Your day, like, yeah, Starbucks, same old low to mid 70s. Didn't think twice about it. Thought about buying it. I'm like, still hanging tight where it was. We got time. 3 p.m. hits. The heck happened, Lanny? That stock price just shot up over 6%. Now Starbucks is trading in the 78, 79 area. Lanny, what on earth happened to Starbucks?
Yeah, finished up over $79 a share. So, nice little bounce back up. But it really comes down to the activist investor Elliot Management, because they, stated that they are moving in on Starbucks, guys. And they're historically known to do this with companies, Southwest Airlines,
That's
Texas Instruments. So, couple stocks here that have had the shake from good old Elliott Management.
Yeah, that was a new position too. As we were reading more articles going through it, they had no position in Starbucks as of the end of Q2. So it's a new position initiated in the second quarter. They must be seeing something in here. They must be seeing some progress made on the operational efficiencies, or if not, they're gonna shake some people down, cause some noise in the boardroom just to try and get their way and make some money off of it. Luckily for us, I know I've been grabbing some shares in the low to mid 70s too. I didn't grab a ton. I grabbed probably 10 shares total when it was down at this depressed range. I'm not sure about you, Lanny.
Yeah.
Few
I mean,
shares
I was
here.
grabbing shares between,
Yeah.
72, 76.
Yeah. So might be a while before we see it hit the low 70s again, especially with the investor noise. But you know what? We're here for the ride. We're here for the Starbucks ride and to see what's going to happen next.
Yeah, currently, not going to be buying at the current price, but if it drops back below 75, that'll be back on my radar. But we'll see it. We'll see if the stock price hangs where it is. It could have been just an overreaction from the news, but that's Starbucks stock. But let's go into the big headline that occurred overnight from Thursday to Friday of the 19th. Man, this really shut down quite a few things here.
Yeah, let's talk CrowdStrike. CrowdStrike is you're not learning this from us, so we all know about the CrowdStrike shutdown here. They pushed out some bad code and the bug just hit worldwide. They didn't do a slow rollout. It was an automated push out from the articles of what they've been saying. Bad code goes out and shuts down everything. Travel's been a nightmare over the weekend. I saw right before we were recording this, it said thousands of flights have been canceled once again. As a result of this, hotel reservations have been in bad shape. Transportation, logistics have just all been terribly impacted here by what's going on with CrowdStrike. And it raises some interesting questions about the future of it. Of how did we all get so exposed to CrowdStrike? How did we let one company pushing out bad code take down so much?
Yeah. I mean, at the end of the day, this could be not just the cybersecurity industry that could be impacted. It could be the travel industry. It could be a lot of companies that rely on, what's going on from crowds, whether it's indirect or direct. So a lot of companies are going to be impacted and are continuing to be impacted by this. can only imagine that airline revenue and hotel revenue might have changed here.
Yeah, hopefully they have a nice insurance policy. I think the interesting piece of this too is when you read more about it, it brought up an interesting weakness that's going to have some interesting implications for us investors too. Costs of cybersecurity have been they've been increasing, but they've been low. Most companies usually have one cybersecurity provider, so they just go with CrowdStrike. They take care of everything. It raises an interesting risk management question. It raises an interesting like corporate governance. Is your company actually safe only having one cybersecurity place? Are you going to need a backup? Are you going to need redundancies in here? We don't know the answer, obviously. That's just an interesting takeaway. So what happens if you do? Companies have to pay. They're not going to just absorb that cost without anything. Costs are going to go up significantly and could hurt bottom lines. Unless you're a cybersecurity company, then it could be good for like your Cisco's of the world that could offer a backup cybersecurity business.
Yeah, I'm sure, kind of like United Health, we really don't know the effects yet, and that's been going on for about 6 months. So, this might take, again, a long time to see what the impact is, from it all, at the end of the day, guys. But hey, if you were part of the CrowdStrike and it impacted your place of work or life, let us know in the comments below. Did you have a flight canceled? Did you have a hotel reservation canceled? Did you have your work day canceled, essentially? Because I know a popular plant in Cleveland, Ohio, I believe, also shut down and just sent everybody home. So I'd be very curious on the impact to you guys out there.
Yeah, and also let me know if you may let us know if you bought the dip with CrowdStrike. I saw their stock was down 10 to 12%. Did you say, I'm just going to go ahead and buy them and just wait for a rebound in the future? Be curious if you have any new CrowdStrike investors out there. Yeah.
That's wild. The next story, though,
Thanks.
Birdman, we got a couple fashion slash tech slash
Yeah.
couple things going on here.
Yeah. I'm going to be honest with you. Before these two stories, before this week, I didn't know who this company was. I still probably don't know how to pronounce it. All I know is they own Ray-Ban, and the company that owns Ray-Ban is Es- EssilorLuxottica Societe. I think it's French Italian. It's a European company. That much I know. The ticker symbol is ESLOY. So why the heck are we here talking about the company that owns Ray-Bans, framing, eye screening, all that stuff? Well, they went out of their niche. From the old dividend king, I believe, VF Corp, they just announced that they were going to purchase Supreme for $1.5 billion. So Ray-Ban's moving to take one of the largest brands out there, one of the cult followings, one of the best buy and flip candidates out there with when you buy their clothing with Supreme. They're now going to be owned by Ray-Ban. So it's going to be interesting to see how that one shakes down.
Keep in mind, VF Corp bought Supreme for 2.1 billion back in 2020. So
Yeah, that's a nice loss. I didn't realize that. That's a good call out there. So taking a loss, they're going to improve their balance sheet. I know that was what VF Corp's thinking was. VF Corp's strategy was take the cash, improve the balance sheet, rebound, get out from this. Supreme, not a core business function. Get it on out of there. That
but
was
not only was that the only news though with EssilorLuxottica Societe, but it looks like Facebook, aka Meta, has a little something going on with them.
yeah, so they're contemplating doing a pretty hefty, large strategic investment in this company because the Meta had been using Ray-Ban in their frames for their eyewear, for their smart glasses. So now it's going well. They want to put some more money into it. They want to put some shekels into their balance sheet, work on the development, and use them as their sole glasses frame maker for Meta glasses, Facebook glasses, whatever the heck you want to call them.
Yeah, there it is, guys. The Meta's getting in on it,
Mhm.
improving their headwear, into the
Yeah.
I don't know if we talk about the metaverse. Um, but again, they're trying to improve what they're trying to do with their VR headsets and their smart glasses. So pretty interesting. EssilorLuxottica making moves, making
Yeah.
splash.
It's worth noting they have a 2% dividend yield, so they are a dividend paying stock. So it's interesting. One to consider, maybe? We'll find out.
International based, yeah, I don't know.
Yeah, you hate those international based companies and the dividends. Trying to figure that out, Lanny.
Yeah, but let's get into
Yeah.
number four because there's a bigger merger that's supposed to close, but it hasn't yet. But part of that is a certain sale of assets, right, Bert?
That's right. Discover. and Capital One are going to be merging and becoming another major player here. It'll be a very fantastic, interesting putting Capital One Bank with Discover Financial Services, putting the cards together, getting the interchange networks all lined up and synced. It's going to be beautiful to see what comes from that. Interesting caveat though, Discover, the one thing that always separated American Express and Discover from Visa and MasterCard was that they held loans themselves. They had loans on their balance sheet, so they earned that interest income. Discover didn't continue offering this, but they had a massive student loan portfolio book. So they had a massive population before they shut the program down of borrowers that took out student loans on with Discover. Not anymore. They just sold that over to KKR and Carlyle Group to bring in about $10.8 billion of cash. My guess, I don't know whether it's been released, not released, announced as strategic. As they combine the bank, credit card company, they wanted just to sell off this non-core book to a private equity firm just to take some cash, clean up the balance sheet, and get the two companies ready to go for the merger.
Yeah, I think it's been going on for a while. Discover was trying to look at selling the business just to make it from an operational standpoint a little bit easier, to perform as a company. And hey, kudos then to Capital One eventually, because now you don't have to worry about all the ins and outs that's going on in the student loan industry.
Yeah, get out of the political madness that is the student loan sector. So,
Yep.
so everyone, four stories here. Again, Starbucks getting a major capital infusion. CrowdStrike shuts down the world basically for a day. EssilorLuxottica by Supreme from VF Corp gets potentially a strategic investment from Meta. And lastly, Discover student loan book is out of there. Everybody, let us know what your thoughts on these four stories are. Let us know if any of them impacted you. We'd be very curious to see.
Yeah, would love to know. Love to know all the Discover shareholders out there as well, guys. But remember, make sure to subscribe, like the video. Hope you guys have a nice week. Definitely keep saving, keep investing. Let's get to financial freedom, guys. Let's freaking go.
And remember, you're either with us or you're against us, Jack.
That was Bert, the Herd, and Lanny from the Dividend Diplomats over and out.